Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, is angle and quality of retracements. A little while back, we talked about the level and depth of retracements in terms of 40%, 50%, 60%, 100%, and we talked about the psychology and the thought process behind 100% versus a 50% retracement. Well, there's more to it than that. And even though that lecture was pretty in-depth and detailed, like I said, there's just a lot more to it than that. We also have to consider the angle as well as the quality of the retracement. Some people go, okay, I understand the word angle, Jared, right? You don't want something to go straight down. You kind of want it to go sideways a little bit, 45 degree. I get that. But what do you mean by quality of retracement? Well, we're going to talk about that today, guys, in terms of overlapping bars versus sequential bars, et cetera, and so forth. And it's a very, very important topic. And then towards the end, we're going to put it all together, meaning we're going to talk about level of retracement, depth of retracement, percentage of retracement, angle of retracement, and quality of retracement, and put it all together. All right, the reason I bring this up is there's so many of you out there that are like, oh, I watched one video, I'm a professional trader now. You're not. There's more to it than that. It's not that trading isn't simple. It's just not easy sometimes, right? Sometimes we know the right thing to do, but we don't always do it, all right? So this lecture is a good one, in my opinion. It's not quite as long as some of the others, but it goes hand in hand and side by side with the others to make those better, right? To improve those videos. And if you put them all together, I think today's lecture on angle and quality of retracements is very, very important, all right? As always, if you like this video, come on, man, smash that like button. Hit that subscribe button as well, all right? There's a lot of great content on the Live Traders channel. I'm Jared Wesley. Let's get to it. All right, today's lecture is on angle and quality of retracements. If you guys recall, not that long ago, we talked about level and depth of retracements. So it would be fitting that we talk about angle and quality of retracements. A lot of people will listen to one lecture and in 30 minutes or 45 minutes or an hour, they think they know everything about trading. Okay, and they don't. All right, trading can be very simple, but trading is rarely very easy. It's challenging because of all the things you have to learn, as well as the emotions that it preys on us. But today's goes hand in hand with the last lecture we did on level and depth of retracements, and I think it's equally as important. A lot of people like that lecture, so this is more of that. However, before we do that, it's always important that we do when will the insanity stop, okay? This week, I only have one when will the insanity stop for you. I have more, people sent me more, but I just wanted to focus on one this week, and I want this one to kind of sink in just a little bit. It's not the worst one I've ever had, but I just want you guys to really to think about this for a second as I show you the next slide. Again, it's not a lot of money, but it doesn't have to be a lot of money for it to be painful to somebody. And that's what I want you to take away from this. It doesn't have to be a lot of money for it to be painful for people, okay? So this week's When Will the Insanity Stop came to me from basically a high school student, okay? An 18-year-old high school student. And this person actually emailed me twice and said, would you mind putting it in there just because I need to be reminded of my insanity. So I won't read the whole thing, but basically it says, I opened up an account with $1,300, which is all the money I got for graduation combined with my birthday from friends and family. Okay, so $1,300 and you would imagine for an 18-year-old is probably a significant amount of money. This person got up $300. They were up as much as, $1,600 in their account total. And then, well, they started doing some silly stuff. Okay. The account got eventually up to $2,000 before they started losing money. I would buy a stock and it would go up a bit, but then drop a few minutes later. I kept holding them and hoping they would go back up later, but they never did. So some even went much lower. I only have $270 left in my account. Okay, and I want to skip to the end real quick. Okay. I lost almost all my money in the market in a short period of time, honestly. I've cried myself to sleep several times this summer. No graduation ceremony, no prom, no senior trip, or anything like that. So there's a couple serious comments I want to make. One, You don't need to lose a lot of money to feel pain. Everybody's threshold of pain is different. And what I mean by this is $100,000 to somebody who's got $100 million is not as painful as $1,300 is to somebody who has no money. Okay, absolutely no money. This shouldn't be on the slide. There we go. That's better. So the point simply is it is relative. The pain is relative. Okay, but at the same time, every week we go through this stuff, guys. Every single week. Now, the positive for this person is they're 18 years old, and I'm assuming that in their lifetime, $1,300 won't be all that much money in the big grand scheme of things, in the big picture. But right now, it is all the money in the world. And then when you compound it with no graduation ceremony, no prom, no senior trip, why am I focusing on this? You guys are like, geez, Jerry, it's just a high school kid. You know, they'll get over it. I get it. But this is what happens to you guys in trading, okay? You compound the problem. You know how, for example, I say don't trade when you're sick because you're already not feeling well, and if you have a bad day trading while you're sick, you're thinking, oh, the whole world's against me and this and that. Well, this is what's happening to this person. They're feeling the weight of the world. No graduation, no prom, no senior trip, and they lost $1,000, okay? You don't want to be in that position. Trading can be stressful enough. So, couple comments. Don't quit your day job when you first start trading. That's just foolish and silly. I mean, only an idiot would quit their day job when they first start trading, unless they're super flush. But even then, why would you quit? You're just going to burn through your savings for the first year. I know. You can go out on Google and find an ad that will tell you how to turn $12 into $12 million in 30 days. It's not going to happen like that for you guys. Learn from these people, guys. Learn from these segments. This isn't funny. We can joke about it, and I can make some sarcastic comments and make some quick quips. That's great. But this is real pain people are experiencing. Some of these, we saw one a year ago, somebody lost $1.8 million. This person lost $1,000. Stop being stupid. Stop being foolish. There's no other business in the world you can just walk into with no experience and make money or copy your way to success. Okay, there just isn't. Okay, there just isn't. All right, so I feel bad for this high school student. I hope they've learned their lesson. But for many of you out there listening, I know you've done this. It's unacceptable. Just don't. Trade with a stop loss. Get an education. Learn what it is that you're doing before you put money into this. The market, and I'll leave you with this, the market doesn't care about you. It just doesn't. Whether you lost $10 million, $10 billion, or $1,000, market doesn't know your name, it doesn't know who you are, and it doesn't even care. It won't look back and even give you the common decency to give you a last look. It'll just keep walking, okay? Nobody cares about you. Nobody has any sympathy for you, any empathy for you, and if they do, they're not going to tell you, all right? Nobody cares, so don't do it to yourself. You're going to live this one. This is a road you got to walk alone, all right? So let's move on. Let's dig in, okay? Take your stop losses, guys. Take your stop losses. I did this one just for shits and giggles. Guys, when will the insanity stop? I lied to you. I said I only have one. I did it on purpose. I mean, come on, man. I should, instead of when will the insanity stop, I should change it to that Chris Carter segment. Come on, man.
Come on, man. Come on, man.
Right? Look at this. This is just pure ridiculousness. Now, why am I using this particular stock on Tesla on the monthly? Okay? I'm doing this because this basically is the market lately. This is representative of what we're seeing. For those of you out there that are just getting into trading, the market has never, and I use the words NEVER, has never done what it's done in the past 5 months. It has never gone from where it was to up 70 to 80% in a 5-month period. It's never happened in the history of the market. Okay, so all you out there buying Tesla thinking it's going to go to 1,000 and 2,000 and 5,000 because it's a technology company. Anyway, it's the solar panels, Jared. It's the battery tech. You don't know what you're talking about. Tesla's up 500% this year, okay? 500% this year. But nonetheless, I don't only want to talk about Tesla per se. I want to talk about the overall environment. This too shall pass. The real estate market in 07 and 08, when you guys were buying houses and flipping them 3 months later and thought you were a genius, thought you were a rocket scientist because you made 20 or 30%, guess what? How'd that plan out? How'd that work out? For some people, it worked out great. Somebody's going to be left holding the bag, not just on Tesla, on the Qs, on the SPY, and on a ton of other stocks. What goes up will come down. Not maybe, it will come down at some point. Be careful. Speculators, Reddit, Wall Street bets, all you people on Robinhood out there, yeah, you know what I'm talking about. You know, you're hacking away with your $100, $200 account thinking you're going to get rich, and this Tesla confirms it to you. I'm going to get rich. Just be careful. All I'm telling you is be careful. You do what you want with your own money. It's a free country, or at least it used to be a free country until COVID hit, and then you gave all your rights up to socialism in the meantime, and you didn't even question it. Well, the stock market will come down. Okay, it will come back down. Prepare for it. Have a stop loss in it. Don't be a fool. All right, let's get into the real good stuff. So last week, or a couple weeks ago, whenever it was, okay, we talked about level of retracements. Okay, level of retracements. We talked about 50%, 100%, 25%, etc. And we talked about why it's important, the psychology behind it. Okay, and the psychology behind the 100 versus 50% retracement is simple, right? If a stock was really, really strong, why did it need to drop so low before it found buyers? Okay, before it found buyers. So obviously, the answer to that is, well, it wasn't as strong as we thought it was, okay? So that's the difference with 100% and a 50%. And we talked about a 25%, and 25% said, you know what? It's really strong, but it hasn't rested long enough. It's run up so much, so fast, so quickly, that a shallow pullback means it's likely to bounce but then fail, and then 50% was ideal. Now, granted, I spent 45 minutes explaining all of that with various slides, but that's the short version of it. Okay, today we're not going to talk so much about the percentage of retracement. We're going to talk a lot more about the quality, right, and the angle of retracement. I think it's a topic that for some reason gets missed. I don't know why, but it really does. Some people will talk about angle of retracements, right? It's too steep of an angle, but they don't ever or rarely ever talk about the quality. So do they really matter? Yeah, it really does matter, okay? So these are some of the things that we talked about last week, right? Retracement levels are used to measure the strength or weakness of a move. Okay, cool. We learned that before. They help us determine if the current trend will continue or if it's going to reverse, meaning the level of retracement helps us determine whether that's going to reverse or not, okay? It also helps us determine the odds of success. Is this pullback high odds of pivoting and going higher, or is it low odds of pivoting and going higher? And if so, do we want to take it or not take it because of those odds? All right, and then in short, we said, hey, retracement levels help keep our expectations in check. They keep us objective. But that was only half the story, right? It was only half the story. What about the quality or the angle of a retracement? Well, let's talk about those for a minute, okay? Excuse me. So here are some important points, guys. The steepness of the angle determines the demand or lack thereof, right? So in an uptrend, let's use an uptrend, the steeper the retracement, the lower the demand. And when you think about it, well, that makes logical sense. If something is dropping very quickly, clearly there are more sellers than buyers. All right, think about it for a second. Just try to, I know common sense is very rare, I get that. But if something comes down on an angle of, say, 40 or 50%, a slow angle, it means what? There's buyers and sellers kind of fighting on the way down, right? There's that tug of war on the way down. But if they go straight down, it's basically like buyers have left the building. Nobody wants anything to do with this. And nowhere do you see this more prevalent than in climactic setups, right? The reason a climactic bounce can be so potent is because the sell-off was even more potent, right? Because there was so much... what's the word I'm looking? Not demand, the lack of demand, right? The sellers were overwhelming the buyers, so the stock goes not only straight down, but it goes straight down with wide range bars. So if you think about it logically using common sense, the steeper the retracement, the lower the demand. It wouldn't be a steep retracement if there was demand, right? It would be a less angle of a retracement, okay? So buy setups after steep or significant retracement angles have lower odds of working, i.e. they fail more often because there's a plethora of sellers now. Now remember, I want to distinguish this. It's important here. We're talking about buy setups. We're not talking about climactic. See, some of you will say, well, geez, Jared, then why is a climactic so potent? If a significant retracement angle has a lower odds of working, why are climactics so potent? Again, use common sense here. Climactics move much, much deeper. The depth of retracement, remember 50%, 100%, 150%, That has a lot to do with not just the angle, but the depth as well. This is not, we're not talking about depth here. We're still hopeful of a 50% pullback, but the angle is what we're referring to. So my point I'm making is when you have a climactic, the depth of retracement is so good that everybody that wanted to get out got out. Make sense? Everybody that wanted to get out already got out. That's why the depth was 100+%. But on an angle, steep angle retracement, but the depth is say 50%, not everybody has gotten out. So it has a lower odds of working. They fail more often. I tried to explain that clearly. Hopefully you guys got it because it's a very important distinction. Okay? A substantial change in the angle of direction often ends a move. Okay? It often ends a move. All right? So the angle of an ideal retracement is roughly 30 to 45%. Okay? Often 30 to 45%. Guys, I need you to visualize this in your mind. It's very simple. Every single parabolic or climactic you take does what? Does what? Has 100+% retracement, right? Every angle has 100+ retracement or more, okay? So if that's the case, there are sellers galore. Okay, there are sellers galore in there. All right, hold on one sec here. Okay, I did it on purpose, guys. I did that on purpose. All right, I did it on purpose. Just give it a second. All right. Okay. So my point I want you guys to visualize here, and maybe I should have put a chart up for this, but I think it's an easy visualization. We're talking about steep angles on climactics, but they're not just steep angles. They're deep retracements, right? It's not a 50% pullback on a climactic. It's 100, 200, 300% pullback, okay? Think about that. But yet, the angles that I'm talking about today are the same angle of retracement, but the level is 50%, 30%, 60%. That's what I want you to visualize. See, a climactic goes 100, 200% on the way down, and the angle is straight down. We're still talking about a straight down angle, but only a 50% retracement. And that's what I want you to visualize. So anyway, so the angle of an ideal retracement is roughly 30 to 45%, or degrees, I should say, degrees, okay? So sequential lower highs and lower lows. Substantially overlapping bars, this is quality now, substantially overlapping bars are not ideal. Okay, you want about 20% or less overlap. So think about it again visually, and I'm going to show you visually in just a moment. I will, I promise. But if you have one bar that's a red bar, and then the next bar has a 50%, 70% overlap, that means it was green, and then it went red, and then it was green, and then it went red. That's a sloppy overlap. You want very little overlap on a pullback. So quality pullbacks are tight. They're not overlapping, and they're not whippy. They are much, much more predictable and therefore much more reliable. Okay, don't worry. Slides are coming, all right? So you want little to no overlap, 0 to 20% overlap. You want tight, not super, super wide range bars, not super steep wide range bars, okay? And ideally in that 50% range. Let's take a look. All right, so now, this chart, in my opinion, exemplifies what we're talking about, okay? So on the left, we have a stock that we can clearly see likely was in a downtrend because you can see the moving average, right? The moving average is trending lower, okay? And then it finally, maybe it was a big gap down, moves up, pulls back. And I want to start the focus right here, okay? It moves up and it goes sideways. Now remember, there are two types of corrections. There's a time correction and a price correction. This particular one was a time correction. The stock moved up 1, 2, 3, 4, 5 bars. It got far from the moving average and it consolidated back towards the moving average. This is right out of professional trading strategy. Doesn't have to touch the moving average, just get close. And then it rips. Cool. Now we have a pullback. Lower high, lower high, lower high, lower high, lower low, not quite a lower low. But note, it pulls back to support area, rising moving average, and about a 40% retracement. But notice the angle here is not super steep. You can see that by the pink line. We'll move up again. We get far from the moving average. Notice the angle here is not a super steep angle. We move up, we pull back. Notice the angle here is not a super steep angle. But then at the very top, what do we have? A very steep pullback. Not only do we have a very steep pullback, but the level and depth of retracement is about 80%. So if we start here, right here, the angle is good. The level and depth is good. So far, good. Over here, the angle is good. The level and depth is good. The angle is good. The level and depth is good. We're talking about 40 to 60% retracements. But notice this retracement's a little bit more than the others, okay? And now we move up again, but now we have an angle that is super steep and the level and depth. Remember I said earlier when we talked about this, we're going to put them all together today. So we talked about level and depth, a week or two ago. Now we're talking about angle of retracement, okay? And quality. Once we put them all together, you get a much better understanding of what a quality pullback looks like. Now, and to be clear, there are some times where you have more overlap than others. For example, I look at this and you do have like 50% overlap on these bars. Lower highs and lower lows, but you do have some overlap. And then you get a buy setup that triggers right here, okay, triggers right there, and we honestly don't know. Do we know if this buy setup worked or not, guys? Can you give me a definitive yes or no if this buy setup worked on the first try? Anybody? Anyone want to take a guess? This buy setup right here where my cursor is absolutely yes, it worked, or absolutely no, it didn't work. Do we know? Some people say no, it didn't work. Some people say yes, it did work. You know what the answer is? We don't know. We don't know, right? I don't know if it worked. I know where the stock opened. I know where the bar opened, okay? It's a red bar, okay? So I know that it opened right here where the tip, the very tip of my cursor is, and I know two things. I know it went all the way up to the top, and I know it went all the way down to the bottom. You know what I don't know? The order in which it happened, right? So it's possible that this stock went all the way up to the top and triggered, right? It's possible. It opens right here, the tip, the very tip of my cursor opens right there, goes all the way up to the top and triggers us in, and comes all the way back down and stops us out because it broke that area to the left. It's very possible that that happened, okay? And then the next day it went on. And if that's the case, then you're gonna have to get back in. You have to use the 84% rule. The point is even these, okay, even these don't work every time, all right? But the point is, this is a buy setup you would absolutely consider using. Lower high, lower high, lower high, lower low, lower low, lower low. Sitting at about a 40% retracement, sitting right near the rising moving average, sitting on minor price support. It's a buy setup that you absolutely want to take, okay? Rips up, pulls back, rips up, pulls back. Now you have to question this. Now you're looking at this and you go, whoa, that angle of retracement steep and it's deep. The pink lines look like they could flip over, which means the stock also looks like it could flip over. True? Take a look at the lines. We go from a flat line, slight angle, slightly more angle, steep angle, boom, boom, boom. Looks like the stock is getting what? Tired. So the next buy setup is likely, not guaranteed, the next buy setup is likely to put in an M top. It's likely to put in a double top, M top, and fail. This potentially, because I don't know the future for sure, is a change of trend. This is not a buy setup you want to take. It's not a buy setup you want to take, okay? So let's take a look, all right? So look on the left. We have a stock that moves up very nice. The quality of the move up and the pullback are great. Notice there's very little, if any, overlap. Now, granted, I didn't put any tails on these bars, but notice the pullback, very little overlap. This red bar has little overlap on this red bar. This red bar has very little overlap on this red bar, and same here. And to move back up, very little overlap. Guys, smooth pullbacks equals smooth moves back up. Smooth is right out of PTS. Smooth pullbacks equals smooth moves back up. The overlap into prior bars should be minimal, okay? Minimal, 20 to 30%, not 50% plus. Note, the move up here is great, but for whatever reason, the move back is not that good. Buyers and sellers are fighting, right? So at first you're like, oh, that's good, but it keeps going lower. So who's winning? See where I'm going with this? Yes, there's a lot of overlap, and some of you are like, oh, the buyers are doing a good job. They're not, because they're ultimately losing. All right, so the move back up is going to be equally choppy. So the pullback is choppy, the move back up is choppy. Smooth up, smooth down, smooth down, smooth up, choppy down, choppy down, choppy up. Okay, so if that's how you want to look at it all the time, guys. Okay, so keep an eye. So smooth pullback means a smooth move back up. Choppy pullback means a choppy bounce. Okay, so let's take a look. Now, what we have here, guys, is a stock that, again, keep in mind, it's important. The last slide I showed, guys, stocks are never going to be that perfect. Let me show it one more time, okay? Stocks are never going to be this perfect, okay? They're not. This is for demonstration purposes only. Now, on the right, they will be this sloppy. Guaranteed they'll be this sloppy. But on the way up, they're rarely this perfect. So on this slide, you get an understanding or an idea, okay, of what these stocks will really look like in real time, okay? So if you take a look here, the stock is moving up relatively sequentially. Higher highs and higher lows and higher highs and higher lows and higher highs and higher lows. Okay, the pullback is smooth except for the bottoming tail. That bottoming tail is not what you want to see. But right here, lower high, lower high, lower high, move back up. Not too bad, all right? Again, you got a little red bar hiccup in there, but all in all, not bad. Now take a look. Now look at this pullback. Look at the overlap on this pullback. Wide range, red bar, wide range, green bar, wide range, red bar, and ultimately, the buyers gave it a good shot, but they failed. Look at the overlap at the bottom. I mean, 100% overlaps, and then it moves up, pulls back, moves up, and then look at the pullback here. These are the kind you want to stay away from, all right? Lots and lots of overlap is not usually a smooth move back up. And this slide is a really good slide because it shows sometimes they go up anyway. I mean, Tesla goes up every day. They don't make any money or hardly any money. Why is the company worth $400 billion or $500? There's no rhyme or reason to it. My point is we're odds traders. And note, it says overlapping pullback is a less reliable buy setup. It doesn't say buy setup will never work. It says less reliable. I want that to be very clear. Nowhere in here does it say will never work. It says less reliable. And I don't know about you guys. I would rather take more reliable trades than less reliable trades. So for me, a pullback of this nature is something I would likely stay away from. I want more of that V bottom, not the rounding bottom. And when I pull back, I don't want that overlap. Okay? So this is an example, excuse me, of a really, really good buy setup, right? So you have a stock trending up, time correction, right? Consolidates, moves higher, smooth, right? Not a lot of overlap. There's a little overlap here, but it moves higher. Notice the pullback. Very little overlap on the pullback. Lower highs, lower lows, and this is where we put it all together. We not only have the perfect angle of retracement, roughly 45 degrees, we also have a high quality retracement with little overlap. Lower high, lower high, lower high, lower high, lower low, lower low, lower low. Top of the pivot is here. Bottom of the pivot is here, about 50%. Minor price support is the green line, rising moving average. Guys, this has it all. This is a high odds, highly reliable buy setup. The stock is in an uptrend. We can see that from the moving average. It checks almost all the boxes. So you got to ask yourself, if I could take this, why would I spend my time focusing on this, right? Why would I spend my time focusing on this? Doesn't make a whole lot of sense, does it? Find quality, scan for it, be disciplined, patient, wait for it, and then trade quality. Okay, that's what it's about. So let's take another look. All right. Moves up, pulls back, moves up, pulls back, moves up, pulls back. Now, take a look. Controlled angle of retracement on these two. Little overlap on the bars. Notice the move up is sequential, the pullback is sequential. The overlap, very little overlap. Notice where they're pulling back to. Minor price support is the green line. Minor price support is the green line. I don't have a 20-period moving average on here, but if I did, it would be right on the moving average. Again, you're getting, talk to me, multiple concepts converging in an area. Multiple concepts converging in an area, okay? So this one, notice the angle of retracement, steep retracement angle here. So this stock moved up huge, all right? Then it pulls back here, but then the wide range bar comes in. I don't really want to buy into a wide range bar because that's a ton of sellers. In this case, the stock chopped around for a while, ultimately put in a new high, and pulls back. Now note, another steep angle of retracement. Notice the level and depth of retracement is about 70 or 80% here. And what do you get? You got a failed buy setup. That triggered. Take a look. Zoom in on it. That triggered right there. And then it failed. Now, why do I show you all these guys? I could have easily, just for argument's sakes, to make the lecture look good, I could have easily cut off the future, couldn't I? I could have just cut all this out and shown you just the red. I don't. I do this on purpose. I showed you the future to show you this is not a buyable buy setup. You shouldn't ever buy it right here, okay? It's below the flat moving average. It's got a failed buy setup. Some go, but look at the support to the left. This stock is tired. Okay, it looks more like a head and shoulders, if anything. This move back up is unexpected. I would never expect this stock to do what it did from this $30 level back to $50. What am I telling you this for? So that you don't make the mistake of buying these. Just because it worked on this stock doesn't mean it's going to work most of the time. And this is what we're after. What will work most of the time? Not 2 out of 10 or even 3 out of 10. What's going to work 5, 6, 7, 8 times out of 10? These buy setups will. Excuse me. These buy setups will. This one won't, this one won't, and this one won't. These will on the left. It's very important you suck that in. It's very important that you internalize that. Just because it worked doesn't mean it was the right thing to do. I can't stress it enough. People buying Tesla right now at $500, just because it goes to $550 doesn't mean it was a good idea at $500. Okay? You're just gambling. And this is what most traders do every day. They just gamble. And that's also why, admit it guys, let's just talk truth. That's why most of you aren't here after a year. Everybody out there watching the video, in the chat room, wherever you are, you're not around a year later. You're not. Why? Because you struggled, couldn't hack it, couldn't handle it, because you usually do stupid stuff. All right? You were taught proper, possibly, but then you go on and take these buy setups. Yes, it's harsh, but it's the truth. Don't do it. Focus on these to the left because this is where the real money is. And by the way, that's a pretty darn good buy setup right there. I mean, you're getting in this stock and it goes up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars in a row. Doesn't get much better than that. Okay? So focus on quality. The angle of retracement matters. The quality of the retracement matters. Okay? Now, same thing is true in a downtrend. There's no difference in a downtrend, right? It's just the opposite direction. So again, when you have a pullback, you want the pullback to be sequential. And when it bounces back up, you want the bounce to be sequential. You want the angle, again, to kind of be that 45-degree angle. So notice, bounces up, pulls back really smooth. Bounces up, pulls back really smooth. Goes lower, I should say. Bounces up, pulls back. Now what do we have? Now we have a double bottom. So now I have to question this trend. So would I short this stock over here at 38.80? No way, because it put in a double bottom. Okay? Buyers are creeping in now. So good sell set up here? Yes. Good sell set up here? Yes. Good sell set up here? Yes. Are they perfect? No, but they're good. All right? They're not perfect, but they're good. Smooth move lower, smooth pullback with little overlap, angle of retracement is reasonable. Okay? So these are the kinds of sell setups that you want to focus on. Remember, today's lecture is about putting it all together with regard to not just the level and depth, but the angle and quality. okay, but the angle and quality, all right? Here's another example. Here's a stock that moved up, pulled back, moved up. Now, we have a little pullback here. Lower high, lower high, lower high. And again, you can make an argument that the angle because of this bar is a little bit on the steep side, but all in all, not bad, right? It's a relatively smooth move higher. The only hiccup here is this little red bar, but you could look at it and say, you know, that red bar is somewhat understandable after 3 wide range bars and another green bar. So the stock went from 49 to 49.80 and then put in a little resting bar and continued higher, okay? So when you look at the pullback here, this is the top of the pivot. This is the bottom down here, okay? You're looking at a 40% retracement. Bottoming tail, narrow body bar. And it moves up, pulls back, moves up, pulls back, moves up, pulls back. That's a clean, controlled pullback. The angle's a little bit steep. That's why I said angle of retracement is reasonable, okay? These 3 bars are perfect. The wide range bar is a little bit suspect, but not terrible, okay? This is a good buy setup, all right? Here. Interesting. Now, what do you think about these pullbacks? Good buy setup, good buy setup, good buy setup. Those are the 3 questions. Number 1, number 2, and number 3. All right, let's talk about it. Number 1, good buy setup, yes or no? What do you guys think? Just give me a Y or an N. Good buy setup, yes or no? Just take a look. There's no rush. Just have a look at it. And what do you think? Seems like mostly no's, but there are definitely some yeses. Okay, so you want to ask yourself, why would you think this is a good buy setup, right? One of the things we always do as traders is what? Look for reasons not to take the trade, right? See, everybody's looking for a reason to do something. But if you do that, you only need one good reason. That's not good enough. One good reason isn't good enough to take a trade. We need many different reasons. So I always tell you to start with the opposite. Look for reasons not to take the trade. Well, I have a lot of them. A lot. I have multiple topping tails. I have a square top, not a V top. You almost never want to buy into a square top. I'm going to repeat myself. You almost never want to buy into a square top or a rounding top. Don't do it, okay? I have a square top plus topping tails, okay? Some of you go, oh, but Jared, it's a little wedge. It's a little wedge. Look to the left. Beyonce will tell you, stay away. Stay away, okay? Resistance, all up in here. You're not taking this. Let it break above 14, then reevaluate the next pullback. That's your job. Let it break. Why? Prove to me you're strong. Prove it to me first, okay? You showed me strength up here, right? Wide bar, consolidates, breakout. And then what do? You pulled back 70, 80%. Well, that's not strength. Buyers come in, sellers come right back. All this is selling pressure. Topping tail, okay? I'm not here to be that aggressive. Prove to me, confirm to me, you are who you say you are. You say you're strong, you say you're a buyer, prove it. You know how you prove it? By breaking above the high today and continuing higher. Now, let's move on to the second one. Second one, good buy setup, yes or no? Second one, good buy setup, yes or no? Getting almost entirely no's, which is good. That's what I want to see you guys say. No, this is not a good buy setup. It's not a good buy setup. And you go, but the angle of retracement is not that bad. I know. That's the whole purpose of the slide. The whole point of the slide is we're putting everything together here. Not one concept. We're putting all the concepts together. So I have a big red bar up here. A lot of profit taking came in, right? Doji bar, sort of. Topping, bottoming tail. Not really a doji bar. Pulls back, lower high, lower high. Well, this is a topping tail right here. I don't know if you can see it, but this red bar actually triggered. There actually is a topping tail here. And it stopped out, right? It stopped out. Notice it's far from the moving average. The level and depth of retracement is 20%, not even, right? I mean, at the bottom of the pivot is $8, call it $9. The top of the pivot's $24, okay? So $9 up to $24, that's the high and the low. So if you subtract those, it's 15. okay, would be 50% retracement, right? $15 would be a 50%, right where my cursor is. That would be a 50% retracement right there. This thing's pulling back to 18, 19 bucks. It's like a 20%, 25% retracement. And look at the overlap on bar number 2. Look at all the overlap here. This is not a good buy setup. Pull up or bounce higher, pull back. What do you guys think? Number 3, good buy setup, yes or no? It's okay. Most of you are saying, yes, there are a few no's in there. It's okay. It's one of those, you want the real answer to this? The kind that make you think. This is one of those tweeners, one of those buy setups where you're like, well, I have some reasons to take it. I have some reasons not to take it. I have to make a decision. This is not what we would call a no-brainer. It's not. You would look at this and you're like, man, scratching your head like, all right, I have some lower highs here. I have the rising moving average here. It's pulling back kind of near support, but not exactly where I want it to pull back. It's about a 60%. Like there's reasons to take it, but there's definite reasons not to take it too, right? You have a big topping tail, a little bit of overlap here, okay? The retracement's a little bit deep. You're not quite at support. This is one of those challenging ones to take. If you want to take it and say, hey, it's my wild card trade for the week or the day or whatever, okay. Like I say before, if you have a stop loss, you're never going to be in bad trouble. But you still want to take high quality patterns. This one's a tough one. It's not bad, but it's not really good. It's kind of in the middle. Now, one of the reasons I brought this slide up, guys, okay, it's important, is you just saw this chart, this stock, go from basically $6 to $36. And guess what happened? There really wasn't a great entry from 6 to 36. Now, why am I telling you this? I'm telling you this because there are way too many people out there that have FOMO. They'll look at a chart after the fact and go, Jared, we missed it. I get it every day in the chat room. We missed it. Somebody said that about NOW today. We missed it. No, we didn't. It didn't give us a great entry. There was nowhere on that chart where you sit there and go, damn, I wish I would have been in that because we missed a great pattern. Nope. This chart went from 6 to 36, and other than this initial little mini breakout here, there really wasn't much, right? Maybe the $8 mark. That's about it. Outside of that, there's really not much here. It's okay. That's what I'm trying to tell you. It's all right. There's nothing wrong with a stock ripping to the moon without you. Tesla hasn't given a lot of great patterns on the daily chart in the last 3-4 months. It ripped. It's up 500%. Oh, well, how many of you took a shitty pattern and got away with it? 90% of you. Admit it. So you made some money. You got lucky. But I knew it was going to go higher, Jared. I knew it. As soon as Joe Rogan and him smoked pot, I knew he was a good guy. I just knew it. He wasn't a typical nerd. Whatever your reason is for it. You got lucky. And I'm not talking about intraday trades during that 4-month period. There were many. I'm talking about swing trades. You just got lucky. Guys, if you jump in this stock at $12, this stock on the chart, and it goes to 36, you just got lucky. It happens. It's okay. I'm not interested in luck. I'm interested in what will work time and time again. And that's what I went to when I said, most of you won't be here next year or the year after. Sorry, it's tough, but you won't be. I know it. I've been doing this a long time. Okay? All right. So, retracement summary. Common reasons trades fail. Okay? You're trading poor quality trends. You're trading without a trend. You're trading against the trend. Okay? These are big time reasons that trades fail. Well, when we're talking about pullbacks, which is angle of retracement, quality of retracement, level of retracement, depth of retracement, right? Those things, the trend matters. It kind of matters a lot. So don't trade poor quality trends, overlapping, sloppy trends. Don't trade them. Don't trade without a trend. There's a lot of people that trade sideways, overlapping slop. Not just moving up and moving down slop, you're trading sideways slop. And don't go against the trend. Sure, guys, we have rules for climactic patterns. They're climactic, and that's okay. But don't directly go against the trend. Like, oh, that stock looks extended, I think I'll short it. Don't do it. Make sure you have multiple concepts converging. Topping tails, volume spike, wide range ending bars. Don't just short something that looks tired or extended. Don't just buy something on the bottom that looks tired or extended. Have a reason for it, okay? And then once you have the reason, find a reason you wouldn't take it. And if you can't find a reason not to take it, it's probably good enough to take for most people. Many of you out there don't have a trading plan, okay? High quality trends are tight and controlled with little overlap. They're tight and controlled with little overlap. Low quality trends are often whippy, spready, have a lot of overlapping bars, and are very hard to predict. I'm not interested in trying to predict the impossible. I want to predict the probable. That's our job. That's our job. Pick something that you know you can win at. Don't pick something that's a flip of a coin or worse. To be a good trader, guys, you have to be able to accurately define trends. And then have the patience and discipline to only trade the high quality, more predictable trends. Okay, have the patience and discipline, okay, to only trade the high quality, more predictable trends. How many of you are guilty of trading slop, trading crap? Most of you, right? The vast majority of you. To the person that's asking, does volume come into play? Volume always comes into play. You never take a trade without looking at the volume. You could have the world's greatest pattern, but it's doing 10,000 shares. Volume always comes into play. Obviously, that's a newer person asking that question because the people who have been around would know that volume always comes into play. Price is number one, volume's number two. We never take a trade without either. We always look for both, okay? But to be a good trader, you have to accurately define trend and then have, this is the key, this is the hard part, have the patience and discipline to only trade the more predictable trends. I understand, especially in the COVID markets, they've gone nuts. They've gone crazy. And you feel like you're missing these massive moves on Zoom, right? Look at Zoom go crazy the other day, up 400-500% this, more than that this year. All right, I get it, but it's not a get-rich-quick business. So why are you trying to do that? Because you're listening to too many Google ads. Okay, guys. This, by the way, is the cues on the monthly chart. Do you notice anything a little unusual about the cues on the monthly chart? I'm going full circle back from my Tesla. Look at all the bars here. This is a 10, 11-year-old chart. Okay? Looks like it's kind of grinding. Ooh, getting a little bit extended here. Like we had this little choppy consolidation. Then we're getting a little extended here. Okay, we could probably use a pullback. Oh, we get a little bit of a pullback. Nice. Then we rip and we get a pullback. And then, oh, what the, Are you shitting me? Really? What is this? Okay. And this was yesterday. I mean, I think the Qs are even higher. What are they, 299 today? Okay. I mean, this is insanity. It's insane. Why am I showing this to you to end this video? Because this will pull back at some point. Okay. This is going to turn into something like this. We're going to have an extended period of time of sloppiness. Probably after the election, because not much is going to change between now and then, probably. All right? Pull back here, okay? But this is ridiculous. Take a look at the Qs in the SPY. To do the SPY also, doesn't matter, on the monthly chart. This is absurd. It's obscene, actually. Take a look at this bar. Now look at this bar over here. The market was up 1, 2, 3, 4, 5, 6 months over here. Compare those bars to these bars. Now, explain this to me. We're in a worldwide pandemic. Millions of people don't have jobs. Millions of businesses have gone out of business. And the market is just ripping. Interesting. I get it. Some businesses, Amazon, Apple, they're printing money. But you know who's also printing money? The Fed. And they're going to stop at some point. And this is going to come down. It's going to be ugly. So I'm just warning you. Be careful. Be careful. Be careful. All right. So anyway, I hope that you guys learned a little bit about retracement angles, all right, as well as retracement quality. We want that 45-degree angle. We don't want overlap. We want tight and controlled with little overlap. And you're going to take this and combine it with the level of retracement and the depth of the retracement. You're going to put them all together, all 4 of the concepts together, and then they're going to give you those really, really, really nice. Where is that really pretty one? There it is. Then they're going to give you these. And this is what you're after. If you trade only these, you're going to be a good trader, assuming you can get your management under control. All right? So, I'm Jared Wesley of Live Traders. We'll get back at it again next week.
To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.